Kevin Hunter and Dave Ford here on the Business Forum Show on Northwest Digital News. Dave Ford coming to us out of ActionCoach in Minnesota. And we're broadcasting here live from the Northwest Digital News studios. We're going to talk today about profit and loss, that scary combination of words that most business people go, ARG!
Yep.
So where would you like to start, Dave?
Well, I think it started just when we first talk with somebody, one of the first things we'll typically ask is, what do your financials look like? Where are you at? What's going on? And usually the answer is something like, well, I'm a little behind, or well, I haven't really looked at it. I don't really know. They don't really look at it very often. The first reason is because, there's an example of a profit and loss, is they don't really understand how to read it. They don't really understand it. And they'll ask their CPA about it. And the problem is the CPA typically speaks in CPA. So it doesn't actually help them understand it. It's more confusing than anything. So they don't look at it. They know how their business is doing, at the end of the year when they file their taxes and they have a tax bill. The challenge is it's very difficult to actually grow a business and plan a business based on that, right?
Mm-hmm.
So you have to be willing to at least look at a profit and loss. This is an example of a profit and loss. And you'll see on the left-hand side, this one is accrual basis. There's two versions. One is accrual, one is cash. Accrual is if you invoice and if you enter invoice. So if you get your phone bill, your cell phone bill, and you put it into QuickBooks, it will show up on the accrual basis profit and loss. It won't show up on the cash till you actually pay it. It'll show up on the accrual when you enter it. It'll show up on the cash when you pay it. Same thing with an invoice. If you invoice out work, you'll invoice it out. When the invoice goes into your accrual, goes into your QuickBooks, it'll show in your accrual profit and loss. It does not show in the cash profit and loss. If you don't do invoicing, then you can just look at the cash. If you do any invoicing, you want to look at both, because the accrual will actually tell you what to expect coming up in cash, right?
Mm-hmm.
And if you look at the top, this is broken up into revenue and then cost of goods and then fixed expenses. One of the challenges we have a lot of times is I'll see a profit and loss and I'll look at it and it'll be one line of revenue and it'll just say income or sales or something like that. And then I'll go to cost of goods and there's no cost of goods. Well, you need to know your profit margin between your revenue and your cost of goods. The cost of goods simply being what it costs you to produce that revenue. So
Mm-hmm.
if you sold a widget for $100 and in parts and whatever that you had to spend in order to make that widget cost you $40, that means for every $100 you sell, you make $60 and it costs you $40 to produce it.
Mm-hmm.
You need to know that based on growing your business. Well, a lot of times they'll say, well, my accountant set up my QuickBooks. It's right, but your accountant sets up your QuickBooks simply for a tax basis reason,
Mm-hmm.
not for managing your business. It's all about managing your taxes. So you should have multiple revenue lines based on different types of businesses, and then cost of goods lines that go with that. And then fixed expenses are everything else that you just have to pay. And in most cases, you look at a business and they're going, oh, I'm not making enough money. I need to cut expenses. So that's just the default. Without looking at this, they just say, I need to cut expenses. Well, the problem is, sure, you can go and cut expenses, but if your profit margin is off, that's where you should focus. If you should be making 60% gross profit and you're only making 42, you want to find out what's going on with that. And there's lots of inventory waste, labor waste. There's lots of little things that go into that cost of goods being out of whack. But without even looking at it, you don't know.
What do you think so many business people are inclined to believe that what they're getting from the CPA is a useful profit and loss relative to revenue? Why do you think they're led to believe that? Because as you pointed out, a CPA's focus is all around taxes. And those aren't the two things. They aren't the same. Managing by revenue and managing by taxes aren't the same thing. Why do you think so many people think it is?
Well, I think the CPA is the expert, so I'm just going to trust the CPA. The problem is there are several different types of CPAs out there. There are a lot of really good ones. There are some middle of the road ones, and there are some not so good ones. It's just like with any business. That's how it works.
Mm-hmm.
But very few CPAs will actually go through and have you set up the QuickBooks the right way, especially if they're doing any of the bookkeeping. So like if you're handing a shoebox off to your CPA at the end of the year
Mm-hmm.
to do your taxes with all your receipts, Yeah, he's just putting stuff in there the easiest way possible. He's not putting a lot of extra energy or time into it, putting it in there the easiest way possible. He's making the job easier for him because all he's concerned about is taxes. It
Hmm.
takes more time to separate your revenue streams, to separate your cost of goods streams, but that's the only way you can manage the business.
Interesting. Interesting stuff. And I mentioned to you here off air that when you say that there's all these different calibers of CPAs out there, I ran into one of my first business ventures, ran into a CPA who, when I started looking for some key piece of information that I wanted out of the P&L, he immediately told me that you're asking me for something that's not in my normal package. And so you're just
Right.
making my job tough.
Yeah, well, that's what it is. There are a certain portion of CPAs that's who they are. They're really not in it to help the business or maximize the business. And the thing that a business owner needs to understand is if they're not getting the information that they want from the CPA, they should go talk to a different CPA. Just because you have a CPA, if you're getting surprises with taxes, if you're getting, at the end of the year, you go file your taxes at the end of the year and you got a surprise $30,000 tax bill, you need a different CPA because your
Right.
tax bill should never be a surprise.
Mm-hmm.
Okay. I had one client, he was behind on payroll taxes. And, we started looking at it and I asked him the question. I said, well, do you take payroll for yourself? And he says, yeah. So do you take payroll and owner draw? No, just payroll. Okay, well, you're a small business owner. You should be taking payroll and owner draw. So cut your payroll in half, take half of it as an owner draw. And that'll reduce some of your taxes. Well, he had like a $12,000 payroll tax bill that he was trying to catch up on. And he went and asked his CPA, well, can I do that? And the CPA said, sure. Well, how come you didn't have me doing that? Well, because you never asked. That's the problem. Is most CPAs wait until you ask them something before they do it. Most CPAs are very reactive. They're not proactive. So they wait till you ask a question. They wait till you request something before they do it. The problem is the CPA is the expert. You don't know.
Mm-hmm.
So you don't know what to ask.
Well, that's really why in the business equation, if you're unfamiliar with that, you really need to insert a business coach or somebody who has that background into that equation,
Right.
because it's somebody who knows what you ought to be looking for. And makes all the difference in the world. Let's talk a little bit about the balance sheet and how that compares to profit and loss.
Yeah, I mean, the primary two reports you should be looking at in your system are the income statement, which is the profit and loss, and the profit and loss is all about revenue and expenses. The balance sheet is liabilities and assets. You look at them once a month, and people will look at the balance or the profit and loss and they'll go, "Oh, it says I made $20,000 last month, but I don't have $20,000 extra in my checking account." Right, because things like if you bought a car and you have a loan against the car, that car payment is not in the profit and loss; it's on the balance sheet, because you have a liability that goes against an asset.
Mm-hmm.
If you have a business loan, you have a liability that goes against the asset. So they don't understand. They look at that number and they see all this profitability, but they don't have the cash because they've got a lot of liabilities and assets that they're paying. And the problem is you're paying your taxes based on that profitability.
Mm-hmm.
So what your P&L says is largely where they're looking at what you're going to pay in taxes, that and any extra pay that you've got, any owner benefit that you've got. So you need to understand the relationship to your P&L and your balance sheet. And do I need to offset this with some depreciation or some expedited depreciation, that kind of thing? That's where you get surprise tax bills. You show up, I didn't make any money. How can I have a $30,000 tax bill? Well, this is why.
So for that business owner who's sitting out there and is a little bit intimidated by the P&L and the balance sheet, and maybe they're not even sure what information they're getting from their accountant at all, are there some really basic guidelines that you could give that person to say, well, this is at least the minimum information you should be tracking so you know if your business is succeeding or not?
Yeah, I would say a couple of things. First, the first thing they need to understand is it's not them. I would say 70% of the people we sit down and talk with have
Mm-hmm.
no idea, no understanding of their numbers.
Mm-hmm.
I would say 70% of small business owners out there do not understand the financials in their business. They don't understand them. and the CPA is not helping them, nobody's helping them. So they're not alone. It's not just them. It's a large number of people are in that same boat. So that's the first thing. The second thing is the first thing you need to be pulling is you need to pull your P&L. You need to get a P&L report. You need to get it every month. And a lot of times, so if you've got a bookkeeper filling it out, or if you got an accountant sending it out and filling it out, that's fine. But you should still be getting it monthly, and you should be getting it by the 10th or the 15th of the month. Sometimes you got a CPA that's the problem with having a CPA do your books is the CPA is doing your books in January, February, March, and April. Is he really doing your books at that point, or is he waiting until he's done with taxes and you get your books done in June or July?
He's totally waiting for the taxes.
He's totally waiting for the taxes. So you get your financials then suddenly in June or July, you're half a year behind. So
Right.
if you had a really bad year, if you had stuff going on, or if you had a really good year and suddenly you're potentially in a big tax liability position, you have less time to adjust. You have less time to figure out what you need to do because you're 6 months behind. So you should get it monthly. If your CPA is doing it and he can't get it to you monthly, have somebody else do the books. Have somebody else pull you a report. You get it monthly, somewhere between the 10th and the 15th of every month, and you look at it. And the things that you look at very simply are your revenue. Is my revenue increasing? Is it going up? Is it going down? Is it where I think it needs to be? You look at your relationship or your cost of goods to your revenue. Cost of goods meaning parts and potentially labor, things that would go into producing that revenue. Look at that. There should be a consistent relationship between that. Could be 30%, could be 70%. It depends on the type of business, but you should have a consistent relationship. And then your fixed expenses should be on average about the same. So, I spend, $18,000 every month in rent, cell phone, insurance, marketing, whatever else I'm spending, whatever else I'm putting my money towards in my business. That should be very, very consistent. So you can look and see, did I have anything out of the norm go on once a month? The balance sheet is the second thing you should be looking at. The first thing you need to understand is your P&L.
Well, great stuff, Dave. And for people who think that this is, this is a process that maybe, once a month is too often or whatever, I offer to most people that, what's in your personal savings account. You should know where your checking balance is on a regular basis, on personal finances. And most people are looking at that at multiple times a day. Why not look at your business P&L at least once a month? Just seems like
you have to know what's happening in the business.
Absolutely. All right, Kevin Hunter with Dave Ford here on the Business Forum Show, talking about profit and loss. I hope this was helpful to you in your organization. Thanks, everyone, for joining us. This concludes today's live programming on Northwest Digital News. Thanks for joining us for this special broadcast. Heard around the world in more than 70 countries on YouTube, Instagram, Patreon, Facebook, and Twitch TV. If you enjoyed a story or guest we had here on Northwest Digital News and would like to strut your stuff on the broadcast, email us today at wainfo2017 at gmail.com or call or text to 360-545-3501. We're always interested in unique stories, topics, and guests to share with our worldwide audience. Before you go, don't forget to give us a big thumbs up and comment on the live stream. And for those of you who'd like to financially support the broadcast, you can do so at patreon.com/Northwest Digital News. We thank you for your patronage. On behalf of Chris Bornstead, Kyle Torgeson, Stephanie Hunter, and all the people that made this broadcast possible, I'm Kevin Hunter. Till next time, take care.